heartbeat of the home, the background of that, and we're going to keep that going overall. So that's the basic difference on that.
So one of the great local insurance agents here, Bill Tobin, that we work with farmers, he always uses the term homeowners insurance covers sudden catastrophic failures, acts of God, right, to a certain extent, where homeowners a warranty policy is more for things that just break.
Yes, we cover systems and appliance breakdown due to normal wear and tear, not normal, not like a freeze, for example, acts of God. And so we're the opposite overall. Yeah. But we do cover systems and appliances due to normal wear and use.
Generally, what does a home warranty policy cost?
And generally would be $400. We do not sell direct to the consumer. They do have to go through their real estate agents. It's called the Venturis. And we do sell through friends and family overall. I see. So not direct to consumer.
And generally, when we're dealing with these, we see it, as part of the closing. It's included in the cost of the purchase, and usually it's just 1 year. But people can keep extending that if they want, correct?
Yes, we have a very high renewal rate of over 70%.
Wow.
And on years 2, they're able to pay monthly payments as well. At the beginning, year 1 has to be paid in up front, right? Basically, and then on the other years they can do. We have once they use it, we have a very usage rate as well. 1.25. I don't know where they get the 2.5, but everybody uses it at least once for something, whether it was a small plumbing leak to major AC issues and things. So once they use it, they see the value, and then therefore they have a very high renewal rate.
Well, and I would say, and Chelsea may or may not agree with me, but I think as a realtor, we like to see people getting these home warranties when they purchase a home, especially if they're like a first-time home buyer. It's $400. A new hot water heater is going to cost you $800, right? If you've got to get a new one done, and I know these whole extended warranty things. A lot of people are really anti-extended warranties. You go to Best Buy and buy a TV or something. It's like, oh, you got to get this and this and. I was like, well, some places it makes sense, but this is one of those ones where I really do think it makes sense. And now there is a service call, or I don't want to call it a deductible, but it's like a service call, right? If something breaks, they need to have somebody come out. What's that going to cost them?
So it's a trade call fee, which basically is like a deductible. It's $75.
I see.
It's a $75 trade call fee. Whether, many times they'll go out, we'll replace an AC or a water heater, and they have the $75 trade call.
Well, and there's going to be little things that break. Let's say a GFCI outlet stops working, right? And that's a $20 part that most people that are somewhat handy can handle themselves. So they're not going to bother to use the warranty for something like that. Maybe they would. I don't know.
Right. Yeah. At that time, when they call it in, and if it's something that small, they do, it's like, you're going to have that $75 trade call fee. It's something that can cost you this much. So they'll walk them through it, and they'll show them how to do it as well, and try to save them that trade call money. Well,
and there's a lot of different types of coverage when we're talking about home warranty type policies that you sell. You said you got a basic policy, $400, and then it goes up from there, covering different things. Something you mentioned earlier, you now have some maintenance type options.
So basically, yes, it starts at $400. We added some awesome coverages such as pest control, rekey. But one of the options that we have available now is a tune-up for HVAC tune-up. So for $25 optional coverage, you're still going to have that trade call fee of $75 when we come out and do it.
Sure.
We are going to get your AC ready to go for the summer, and in the winter time we are going to get your heaters and everything ready to go. A lot of times, let's say they need Freon or whatever it may be, we're going to get that going.
No, that's pretty cool. And I, if you're thinking about buying a home, or if you are in the process of buying a home, I would recommend looking at a home warranty coverage and look at what they cover, because obviously you have competitors that sell a similar product. I know you probably think yours is the best, and I will say, just as a kind of a neutral observer, it is good coverage compared to some of the other companies I've seen out there and what they cover and don't cover. So. anyway, I appreciate you being here and doing that. And one other thing, Chelsea, I don't know if you can comment on this, but when you're working with a buyer or a seller, do you see people wanting that warranty coverage?
Yes. So thank you, Martha, for joining us this morning. Yes, I do see actually a lot of the offers coming in. A lot of buyer agents will already ask for the home warranties, and so that's great. But on the flip coin of that, I also have a lot of sellers that understand that the value of having the home warranty as a listing, because there is that option, correct?
Seller's coverage, yes.
Yeah.
So that's a really good point. So there is the option to, if you have a home for sale, and it's partly a marketing piece where you can say, hey, we're going to include the home warranty with this home, and it's included as part of basically the home sale. And for a seller, it's pretty inexpensive to do that. It's a $75 fee, right?
Right. Yes.
Sorry, we're sharing microphones here, so we got off that. So anyway, that's a good thing to learn about and know about when you're selling your home. So we're going to segue into mortgages. Chris, you've been just sitting here so patiently learning all about home warranties.
That's right.
And I appreciate that. If you're just tuning in, this is Albuquerque Real Estate Talk with Venturi Realty Group of Keller Williams Realty. You can reach us at 448-8888, or our website is welcomehomeabq.com. Chris, let's talk about mortgages. What's going on in the mortgage world? And I think first and foremost is mortgage rates. We had a big run up, almost got up to 4% or up to 5% and over in some cases.
Yes.
Now we're back in that kind of 4.5 range, I would say. Is that fair to say?
We are seeing with somebody having solid credit and everything else, is looking good on the file. I would say we're probably a little more upwards of the 4.625 is really the 5.5 even.
Got it.
And again, just depending on score and whatnot, we're really kind of in between that 4.625 to right at 5 or just over. For some products. So
sure. And I want to talk about a lot of news, and I've seen a couple stories, kind of not really in the real estate world, but like Seeking Alpha and some of the investment publications talking about, here we go again with mortgages, and they're making it too easy. So first off, let's start with this whole conversation around mortgage products, right? A lot of new mortgage products that have come in the last year that we haven't seen. So talk a little bit about some of those.
Sure. And real quick, I just want to say that I am Chris Krupar with Bay Equity Home Loans, and you can reach me at 505-379-9079. And I need to share my NMLS number, which is 1395501.
Great. Thank you, Chris.
So with that, so things are changing in the world of lending. It's been a while, but most of us have not forgotten the crash when the bubble bursted, and things changed drastically. Lots of new regulation came out, lots of rules, and we really came into a place to where most of what was available, which are absolute traditional loan types, standard FHA, standard conventional,
cookie cutter,
cutter loan types. And so when you have somebody coming in who really doesn't fit that cookie cutter loan, they were having to look for portfolio lenders, really, almost hard money lenders, somebody that was going to just make them a straight loan. The interest rates were just astronomical, right? And in a lot of instances, folks just chose to rent or do other things. They were basically avoiding jumping into the market because those loan types weren't available for them. Now, those, what we have coming back now are, a different variety of loan types. A lot of them are referred to what's called a non-QM loan, meaning a non-qualified mortgage, and that just basically means they're also referred to as a non-agency loan, and that just means that this is not a loan that Fannie Mae or Freddie Mac would purchase. Right?
Got it.
It's not going to fit their traditional guidelines.
Sure.
But it's also not going to be as loose as a hard money lender that, really for a handshake and a 15% interest rate, you can get any
and
amount
10
of money.
points.
Right?
Yeah.
Get any amount of money, right?
Yeah.
So, before the crash, we had a lot of these non-traditional type loans, but the guidelines and the regs on them were a lot looser back then, right?
Yeah.
And so they certainly lent it to some of the issues that we ran into. So we're revisiting those loan types. They're coming back out. They are out already, but certainly the guidelines, overall lending guidelines, are there, and it's not as easy anymore to just walk in and get a non-traditional type loan.
So we're going to take a break, but when we come back, let's talk about that, because I've heard a lot of and seen headlines and people going, "Oh, here we go again. We're going to go through it again." But I want to address that, okay?
Sure.
But we'll take a break right now. This is Albuquerque Real Estate Talk with Tico and Tracy Venturi and the Venturi Realty Group of Keller Williams Realty. We can be reached at 505-448-8888. We'll be back in a few minutes.
Another great segment there with Tigo, who's Tracy's not available for the program, but she'll be there next week, folks. You're going to want to stay tuned for some of these amazing interviews that Tigo is having here on 93.7 FM, 600 AM KIVA, Fox News Radio, worldwide at abq.fm. Don't change that. Informative show you've had so far here on the program.
Well, thank you. There's so many moving parts to a real estate transaction, and it's really difficult to try to put out, every bit of information. And obviously that's one of the things we love about the business, right, Chelsea? There is so many moving parts, and trying to help, not try. We don't use the word try around here. Helping people navigate this complex thing called the real estate sale and purchase is, there's just so much to it, and just one little piece like that whole home warranty thing, that's just one little tiny little bit of it, but it's a really important consideration in your purchase. So, but one of the biggest ones is the mortgage, and that's what we were talking about before we went to break. And so Chris, let's jump into this. And I know you don't want to go too in depth but back in the day, let's go, 2004, 5, 6, right? It was the fog and mirror test to get a loan. Where would you say the standards are now, even with these kind of what they call, well, they're not doing stated income, but they are doing a little bit more lenient on proving incomes, or at least the way you prove incomes a little bit easier now than it was just a few years ago. Is that true to say?
Right. Yeah. After the recession and when new rules and regulations came into play, and really just investors and people recovering from that, right?
Yeah.
Really limited, the types of loans that investors were willing to take a gamble on, right? And so, but now that things have stabilized and really things are changing. I mean, rates have come up some. And so, lending is going to get more creative, but it's not going to go back to that loose type of lending that we saw in the past. And so, we used to joke that, take a loan app on a napkin and, head on out to the golf course kind of a scenario. Yeah. We just would certainly hate to think that it was ever really that way, but it's kind of the joke. And so, yeah, it's,
Well, and I will say in Chelsea, you were, we saw some people purchasing homes where you went, ooh, really? Okay. And unfortunately, even though we saw that, I'm sure some lenders saw that, appraisers saw it, everybody kind of saw it, but yet, it was hard to blame any one person, because it was this whole system, the way it had been set up. Now, and that system is now flipped. It's not like that anymore. There's a lot more checks and balances. There's, people actually have to prove that they can pay for their home that they're going to buy, which you would think would have been the standard
before they buy.
All along.
It used to be kind of check it after they purchase.
Right. Yeah. Well, and part of it often goes back to, our ideologies here, especially in the United States, right? It goes back to that, well, everybody should be able to do this.
Right.
And everybody should be able to do that, right?
Yep.
And so, all that coupled with, folks here are trying to make money, investors are trying to make money, people feel like they need to keep up with the Joneses, right? This all kind of comes into to create that scenario. And what was lost sight of and what's focused on now, and what lenders are burdened to do is, in our process, one of the major things that we have to do is prove the ability to repay.
Yeah.
We've got to take those steps. And for folks who the last time they did a home loan was like 2005, when they show up at the office now and we tell them there's this laundry list of documents
all
that
the stuff they need,
right? They cringe. They're a little frustrated. But what I remind them of is that they, you, me, we are benefiting now that we're doing it this way. It's a benefit to all of us. It stabilizes property values, that we're going to such lengths to prove someone's ability to repay, because when the market's not being saturated with foreclosures, it's better for all of us in the long run.
Well,
right?
In the steady appreciation, I mean, we think about our market. Since I'm the stat guy, I mean, we've had 3-4% appreciation now the last few years, which is a good, healthy number. We don't have that 15% like we had in 2005, I think it was when we had a 15% appreciation, which is, that doesn't make sense. The other thing that was happening back then that we saw a lot of were investors, people buying second and third homes. They're going to rent them and they're going to make all this money and da-da-da-da-da. Well, we're not seeing that now. Really, the growth in our market, in the housing market, is really organic. It's, it's people that are here, or people moving in here that are just buying homes, moving up, starting families and so on. So I think my point is, I don't think we have any worry about some sort of strange housing bubble here, especially in the Albuquerque market. It's steady as she goes.
Yeah. And it's a much more healthy mindset now, right? The clients that we're dealing with, back in 05 and 06, there was a lot of this mindset of, I'm going to buy this house, live in it just long enough to get past capital gains tax, and I'm going to make all this money, right? The house became this short-term, quick flip, because I'm going to sign a contract on my house today, and 2 years from now it's going to be worth $50,000, $100,000 more. Right?
I knew people that were buying, builder homes, from builders. They'd buy them, do the 6-month build, and by the time the 6-month build was done, the home was worth $20,000 more, and they were just turning it around. Oh, yeah. They were just flipping it basically at closing day. Yeah. And that doesn't make any sense.
No, it doesn't.
And it was happening all over the country. That wasn't just here.
Yeah.
So,
exactly.
Yeah. So let's Tracy would be going crazy right now because she hates talking about the bad times in our market. I think the point is,
they're good times now.
The market is steady.
Yes.
Interest rates are even. Let's just hit on that real quick. I'm going to put you on the spot. What do you think interest rates are going to do now for the next, let's just say 6 months?
Well, right now we're all just waiting for things that could have some sort of an effect, right? We're waiting to see what the feds are going to announce, right? The last little adjustment to the rates took place when the national job stats were released. And on that day, rates went up a little bit. And when we say that means the cost of each particular rate got a little more expensive that day, and then they cooled back off again. So right now, rates are kind of stalled.
Yeah,
there's a subtle fluctuation to them, but everybody's projecting that as we progress through 2019, by the time we get to the end of this year, they're going to be somewhere a little higher than where they are now. They are going to inch up, and really that has to do with the health of the economy. There was that time when it seemed so great that there were rates in the 3s available, but that was the sign of a very desperate economy.
Well, and you hit on a really good point. When mortgage interest rates go up, that's a really healthy sign for our economy. And when the Fed raises rate, that means that the market and the economy is strong, and it is strong, and it's steady, but it's not overheated, and that's a good thing. So I want to just talk about market stats real quick. Let's just talk about January numbers. Sold listings in the greater Albuquerque area. This is sold residential properties, is 630 last year. 830 last year, 830 this year. Exact same amount. This is residential properties in the greater Albuquerque area. So our sales are steady. The thing that's interesting though is the number of homes for sale is down 12%. So there were almost 3,200 last year. This year there's only about 2,800 based on on these stats. So Chelsea, let's just talk about that. Inventory's shrinking. We see that, especially in the under $200,000 price point for homes in Albuquerque.
Yes.
But if we go over 200,000, over 400,000, there's still a good plenty to choose from, right? So it's two very different markets, right?
Very different markets. I'm finding that the 300 to 450, 500, can be a little bit slower to move than anything under the 200. Naturally always sells very, very quickly. But I will say that price ranges even from 500, 800, 900 actually are moving a lot quicker than they ever have the last 5 years. Just listed one in Primrose. Looks like we're getting a couple offers on it, and sold at the $1.3 million fairly quickly for this marketplace. So the luxury market is having quite an easier time selling than it ever had the last 5 years.
Well, if you get up in that let's call it the ultra luxury in Albuquerque, $1 million plus, right? Generally our market 500 and above is considered luxury, right? But you get over $1 million in Albuquerque, you can get a really nice house. A really nice house. And that market is still slow. There's probably, one buyer for every 20 homes on the market per month, right? And so there's a lot to choose from. And I think the point is if you're looking to buy or sell and you're trying to time the market and figure out what to do, I don't think there's any reason to do that. Interest rates, right, Chris? They don't seem to be going anywhere. The market just is kind of chugging along steady. Is that fair to say, Chelsea?
Very steady.
Yeah.
I foresee it to be very steady this year.
Yeah.
And right now with inventory very low and still this late into the middle of February. Usually we've already seen a slight increase, but I feel like it's very low.
Let's talk about some homes. Let's have fun. Let's talk about some homes. And if you're just tuning in, this is Albuquerque Real Estate Talk with the Venturi Realty Group of Keller Williams Realty, and we can be reached at 448-8888 or visit our website at welcomehomeabq.com. Chelsea, some great homes we got coming on the market. We've got a lot in the pipeline, right?
So we do have a lot in the pipeline, but some of them just hit the market here today, actually.
Yeah. Oh, there we go.
So we have a few nice homes up in the Heights. One on Alameda, Wyoming is coming on the market. Great school district area right across the street from La Cueva there. And that one's going to be listing at $465.
That's a popular area
very
for
popular
that school
area.
district. Yeah.
Already have a few showings scheduled for today.
Yep.
I've got another great one up in the Heights for $365 price point area. And also one for $180. So anything under $200 and the Heights goes pretty quickly. So I have a few great ones also on the west side too that are coming on the market. One that I really want to talk about, and these usually go without even entering our MLS system, is we've got a great as-is property in Rio Rancho just at west side and Coors there, and it's $175. So that one will probably
west side in Coors or west side in Golf Course?
West side in 550.
Oh, okay.
Yeah,
okay. Got it.
Right.
Yeah. Like the old unit, they used to call that Unit 16, but it's not really a unit. But anyway, yeah. And what's that going to be at?
That one's going to be at $175. And it's about a 2,000 square foot home, refrigerated air, brand new roof. It's just going to be an as-is, whereas, so.
Well, let's just talk about that real quick, okay? 'Cause every home, to a certain extent, is sold as is, correct?
This is very true.
And in our industry, there's a lot of times people say, well, I just want to sell my home as is.
And normally I say that doesn't work.
Yeah, and so what is that? What do you counsel people when they say, you know what, I don't want to do any repairs, I don't want anything to do with it?
Basically, it doesn't work that way. There is not really an as-is, whereas, but if it is priced significantly under market value and it's very knowledgeable to the buyers that are shopping, which this one will be that scenario, you can pick up one as-is, whereas. Mostly in this market, the market is too hot to pick up something as-is, whereas, because the market will take care of a seller without having to underprice a home. There's really no reason for it. But there are certain circumstances where a seller just wants to drop a property, and those properties do not normally hit the MLS in this marketplace.
They should.
They do, but they usually get wind of.
As an MLS board member and past president of the MLS board, I would like them to be in the MLS. No, MLS serves a really great purpose of promoting property. So anyway, we got to wrap it up. Chris Krupar, Bay Equity. Again, how do people get a hold of you if they want to talk about mortgages?
Bay Equity Home Loans. You can reach me at 505-379-9079, and again, my NMLS number is 1395501.
And if you want to hear about any properties we have in the pipeline, you can call us, have your realtor call us. If you're looking for something, you haven't found it in the market, call us. We're at Venturi Realty Group of Keller Williams, 505 448-8888.